I think it is on the dot 7 o'clock now. We'll wait another 1 minute or so. I've posted the link twice, so if there's people that's coming in late, it's not our problem, or not our problem, it's our mistake. We'll be looking at the charts, and we're going off from where we left off last week, 2 weeks ago, with the Elliott wave principle, basic principles of trading as well. Tonight we will be doing demand levels and supply levels, and we will also be looking at confluence, where our Fibonacci's, our moving averages, our indicators, our price action, everything lines up, and we will have a high probability trade that the market will turn there, or that the market will not go. A few admin stuff, let's go quickly. SA Trader Lounge, please go to our competition, guys. You can go down, the link is there. All that you do, it takes you to ACM Gold's Trader Lounge. You open up a demo account, you go to FX Blue, you register there on FX Blue your trader account, and you join our SA Trader Cup. They will sync your link to your email address. You open the link and you join us. There's a lot of prizes to be won. I think George said today that there's 500,000 Rand in prizes to be won. It's not only the first, second, third, or maybe to the 10th place that will win prizes. It's everybody that's got a chance to win a prize. You know that the first week ACM Gold gave a $1,000 live account giveaway with a lucky draw. So please go register. Let's go all join and see who trades bets. I know George is not in the competition anymore because he is hosting the competition together with ACM. So that's quite nice of him. I wish that when I started 12 years ago, that I had opportunities like this, especially the SA Trader Lounge page. And of course the webinars. When I joined, you paid for the services. You paid over $100 a month. You had a chat line that was open 2 hours a day, but we didn't have any webinars, any YouTube that you go back to and you can see what you've been learning. Alright, so it's 2 minutes past 7. I will be going on now. Just to recap quickly, the guys that missed 2 weeks ago that don't understand what I'm saying, the YouTube videos will be on display over the weekend. I had a few problems with internet. I emailed it to Pranal of GFI in Durban, and at the end of the day it didn't work out. I sent it on Thursday. I sent it to him. He will be giving it tomorrow morning. Work through the videos, put it on YouTube. So if you missed something, if you want to go back to something, it's going to be on YouTube probably by the weekend, and then from there every second weekend we will put on new videos. For the guys that just joined, welcome. Please put off your microphones so that we don't interfere with each other. We'll do the basic principle of the Elliott wave principle again, and then we'll go into the live market. We'll do supply and demand levels, and I want to show you some stuff that I've learned over the past 12 years. Alright, so this is the basic pattern. This is the Elliott wave principle. The principle tells us that we're working with an impulse and a correction, that we want to buy in the direction of the trend, and that we want to buy against the correction with an impulse. Normally what happens, you've got an impulse that corrections going to the 618%. The fib zone, there is the price or the action that you want to buy. We also learned there's 5-wave structure, so the first wave is just a smaller version of the big wave. We call it the fractal nature of the market. In other words, the first 2 waves here will normally be on a 1 hour chart, and if you're looking at your daily chart and the 1 hour chart, it will be something like this. So the small 1 and 2 is just a bigger version of the bigger 1 and 2. We also learned that there's 5 waves in all the waves, and there's 3 basic rules. That wave 2 can never pass the beginning of wave 1, that wave 3 is never your shortest wave, and that the 4th wave cannot enter the high or the low or the price action of your first wave. We learned that we must buy the fib zone on a 618%, which is wave 2, and if you want to buy wave 4, it is usually on the 38.2%. You can see there the fourth wave came down to the 38.2% Fibonacci, bounced off, and I made our last fifth wave. So this is just the basic principles, the basic idea. We also looked at the first wave extensions, where our first wave is the longer wave. All the other three principles are still in line. We looked at the fifth wave extension, where our fifth wave is the longer wave. We had examples in gold that we worked through. We worked at truncation, which is our fifth wave, ended just a little bit lower than our third. I'm just going through quickly, guys. If you want to pick up on where we started, the video will be on the weekend. Welcome to the other person that just joined us. We worked with a leading diagonal, which is a wedge in the beginning of the trend. Ending diagonal, which we worked with a pound, is a wedge at the ending of a trend. And we saw the example there with gold at the top a few months ago. There was an ending diagonal. There was five waves in this bullish run. Ending diagonal ended. This market turned around rapidly, and the Elliottician, or the guy that knows how the Elliott wave principle works, knew that that was a big sign to sell. The corrective wave is a zigzag, which is basically the Gartley pattern. There is a video on YouTube of the Gartley patterns that I did. You guys can work through that. Gartley pattern is basically where the market comes down to the 38.2%. It doesn't break the high, and it goes down to the fib zone. That's why you must buy the fib zone, so that your stops is not far from your entry. Money management, guys. We worked with a double zigzag. In 3, 7, 11, that is just corrective waves, where the market came and make overlapping waves, which is a sign of a corrective wave. Corrective waves are overlapping, guys, where the impulse move is not overlapping. We worked through the euro pound, where we saw we had a 7-wave structure here, and it was a good sign that you can sell the market. We worked with expanded flats and running flats, where we wanted to buy the fib zone down here, but the market decided it's just doing an ABC. It's not going down to the fib zone, it's just running away from us. That doesn't matter. We're not in this trade, although we were in the right direction. Rather be in the right direction of the market, guys, than in the wrong direction. This is not the market that you can sell. This is the market that you can buy. If it doesn't go to the fib zone, there's other places that you can buy. And the last thing we did, we worked with triangles, which is usually in the third and the fourth wave. 5 waves down, you can buy the fourth wave, because a triangle is a trend continuation pattern. We also said that triangles can be in the B position. In other words, this is an A wave. For example, I'll do it tonight. There's quite a good example on one of the currency pairs, where this is a triangle in the B wave, and usually what happens, the length of wave A will be your target for wave C. So your A and your C waves is usually the same length, so you can know where you can exit this market. Your A wave usually is the same length as your C wave, and that we call equal legs. We will do that later. Alright, I've covered the principles, what we did in our first lesson. Is there any questions at this stage before I'm going on? We decided that we're going to do some supply and demand levels as well. I will cover this also in this webinar. Before we can go on, any questions, as there's also some persons that just joined us, so we just give them a moment as well. Right. No questions? Everybody can still hear me? Everybody is still fine? Alright, any indication, guys? Can I go ahead? Right, Lonnie, thank you very much. Let's start with the euro. We all know this is a bullish run. You can see this is an impulse move. It is not overlapping. This is a complete run that is now retracing or in a corrective manner. Alright, I'm going to clear my screen and I'm going to start from the beginning. How we work with the market, how we get to a trade, how we analyze the market. Here's a question, Ian. Do you know of any good indicators we can help plotting Elliott waves? Yes, Ian, I use only the RSI. I will cover that as well, where the RSI is just relative strength index, where the indicator is as relative strength is it at the extremes. That is usually your third wave, because the third wave is usually the strongest, and the strength index will show you the strongest, which is the third, and then obviously we will work from there. You know that the fifth wave will have some sort of divergence. Alright, so looking at this market here, we have a complete impulse, and we're gonna analyze this market tonight, guys, per currency pair, and you will see how our thinking must be if you want to enter a trade. So this is a monthly chart. We can see this as an impulse move. We know that the Elliott price principle tells us that there's 3 waves in a corrective wave, 3, 7, 11, but our impulse wave has 5 moves. Alright, so I'm going to start right from the beginning on a monthly chart, and we're going to work from there. Alright, so that's my third and fourth waves, and we know that this is our fifth wave here at the top. Right, so that is quite easy. We can all know that this is fifth wave. An impulse is not overlapping. So that is quite clear. Alright, we know that the second wave usually go to the 618%. We see in this instance that it did happen. And we also know that the fourth wave is usually on the 38.2% of my 2 to 1. So let's go see if that happened. You can see the market came down. Let's make that our 2. Sorry guys, that's our 2. We're on and 2. The market took off in a bullish way. Third wave just came down to the 38.2%, and the market went up. And this is the sign of an impulse wave. Now we're working with a correction wave. So this is our resistance here at the top on a monthly chart. That's our resistance. We know that the impulse wave is complete. We're looking for a pullback. This happened. And we know that this is a triangle, and I'll tell you how I can see that. So that is my A and B. Let's do this. Alright, there's it. And we are going down to C. So that is what I can see on a monthly chart on the euro. I know we're in a bullish run, bullish market. We are retracing. And I'm working with a triangle here. I told you what is the rule of a triangle. It is usually in the fourth wave position or the B wave. So this is a triangle in the B wave. The market came down. Triangle is a trend continuation pattern. Of course, from the triangle it will again break out to new lows. Alright, so I'm quite happy with that. We know that we can put in our fibs, Fibonacci from the bottom up to the top, and we're looking for the fib zone, and we see there we're already in the fib zone. We're already at the 618%. So the euro is on alert, possibly for a turnaround. In other words, the dollar is going to crash. Alright, so that's just what I see on a monthly chart. I haven't made any decisions yet. I'm just counting the waves. I'm just putting in my Fibonacci's. I'm just analyzing the market at the moment. Alright, I'm going down to the weekly. What I said was that usually my C wave is the same length as my A wave. So let's delete this Fibonacci. And I want you to introduce you to this little fib expansion. That is something that you can use with your trading, guys. We call it equal legs, where your A is equal to your C leg, or when there's corrective waves, it is usually the same distance. And I'm going to show you from the top. We draw to our A wave. Alright, that's the length, and we've got our, sorry, there you are, and we've got our B wave here that ended in a triangle at this high. Now this 100% down here tells me that the A will be equal to the C, so we can put our C on that 100%, because that means our A wave is the same length as our C wave. And I'm going to mark it like this so that you can understand. So we're looking at a three-wave pullback where A equals BC. Alright, Ian, monthly demand zone. I'm not looking at demand zone at the moment. I'm just analyzing, and I'm going to tell you where everything comes in. Alright, the last thing that I look at after I've done my analysis is, yes, supply and demand levels, because I want to buy there. That's inequality in the market. Market is not in unison there. Alright, so there I've got my Fibonacci in. Let's put it in again. I know in the fib zone, high alert on the euro. I see that my 100% extension is a few pips from there. I know in that area, in this little blue, let's mark it a yellow. Let's do it yellow. Ships. Right. So somewhere in this box I would like to buy the euro. If I'm a longer term trader, I want to buy in this yellow box. Why? Because we're on a fib zone. We see down there the RSI is at extreme, so alright, that is also indication, and I can put in one other indicator. I put in my stochastic. And what does the stochastic say? Yes, we are totally oversold in this market. Alright, so there's much been going on. Market is oversold. We're on a fib zone here. 100% extension is not far from my fib zone, where my A will be equal to my BC leg. So we're looking at the moment what is going on there. Looking at the left here, and that's where my supply and demand levels come in. I want to zoom in to show you here what I see. We're going to mark it. And I will be looking at this few candles here. It's not really a demand level, but it can be. Do you see this white candle, bullish candle here? The market is sideways. In other words, sellers and buyers doesn't know what the market is doing. They are unequally in the market, and from there the market broke out again. Alright, so that is some sort of demand level. Let's work it like that. I work only on the opening and closes of the price. Alright, so that little red area there I know that's some demand level. I go back, look at my chart again. Let's delete this indicator. We know that the stochastics is oversold. Alright, and we see also there's a nice demand level there. So there's a few places that we can buy the euro. A equals BC, in a fib zone, 100% extension, demand level there at the bottom. Somewhere we want to know we can buy the euro, because we also know that the US is in a little bit of trouble. They've got too much debt. And I want to show you one more little thing here, guys, that I saw in last week. I'm going to clear everything, so remember this chart. We will be buying. Alright, going down to the weekly. Okay, let's keep it in. I want you to show you the familiarities in the market. Any questions at this stage? I'm going to do this too in yellow. I want to look at that leg. I want to compare it to this leg, and I'm going to tell you why. If I do my labeling, it will be a 9-wave swing. This leg is a 9-wave swing. Which is also a 5th wave extension. It's the same thing as a 5th wave extension. I'm going to mark it now. I'm going to explain everything to you now. Compare the two, and you will see how the market fractal nature is giving us some clues. This was a complete 5-wave swing. Alright, look at what the market is telling us here against this little blue box here. Can you see the similarities? Can you see that 1, 2 and 3 and 4 here is the same as 2 and 3 and 4? And what happened just after 4? It started with a 5th wave. So that's our first swing. You can see it, the highs and the lows, guys. We'll go in detail later. I just want to show you on the weekly chart how does it look. There's a 3rd wave. We will look at it now. There's a small 4th wave, and you will see it completed the 5th wave down there at the bottom. So where are we here with this wave? We immediately can see just beneath the 3 here, there's one just beneath it. We can see a wave 2 is the same as the previous leg there, and it's now going, and I believe we're only at the wave 3 here now. We're doing the 4th wave here. Can you see the familiarity between those two legs? Can you see how the fractal Elliott wave principle works? Yes. Yes, Londi. Similarities. So what I'm looking for at the euro, I know I'm close to a fib zone. I want to maybe buy the market. We know that the strength index will show us the waves here. We want divergence to buy. I believe the euro is not completed yet. We will see one more leg down to go down into our C, maybe hit the 100% extension there on 103. I think that is too far. I think the euro will one more leg down and we can buy it, and I'll see it on the fractal market here from 2009, 2010. We had a 5th wave extension, and we're working with that extension here right now at this moment. Let's go to that example. I'm zooming into the daily. Do you see how I analyze the market, how I take my time? We're already busy 10 minutes with this currency pair, and we didn't even decide yet where do we want to enter the trade. Do you want to buy and sell? We only know we're in the fib zone. So please take your time with your analysis, guys. Take your time. You must make money out of this. This is not a thing that you look at for 5 minutes every day and then just go off. When you've got a few years experience, yes, then you can do that. But take your time with this. We're only doing one currency pair now, and it's taking us 10 minutes, 15 minutes. Alright. Write this down. 5th wave extension, we know that this is the same length as my 1, 2, 3 and 4, 1.618% of the length of that. So that does that mean? I put this fib extension, I drag it down from the beginning of my bear wave here at the top, that's my resistance. I draw it down to my 3rd wave, which I've numbered or labeled 3rd, and I pull it back to my 4th wave. Now the Elliott wave principle tells us that the 5th wave will then be 1.618% of that length of that wave. Guys, if you don't understand, please go back to our lesson a few weeks ago. I know this is advanced stuff. The guys that do know that's going on, please stop me if I go too quick. Alright, I want to show you now here. We went back, we're in the fib zone on the 618%. We had our A equals my C leg, and can you see that my 1.618% of my fifth wave extension is basically on top of the A to B C leg? Do you understand that? In other words, these two red legs, the 100% extension, that's where they are the same length. And this last leg that I'm working with, the fifth wave extension, is 1.618% of that. That two Fibonacci's are basically on top of each other. That's a very good indication that this market might turn around there, because it's got the same confluence area, and that's what I want to do tonight. The confluence area, the confluence between the 100% extension and the 1.618% extension. So that's how the market is on harmonics. So harmonic trading, our Fibonacci's lines up, he's in a fib zone. Alright, let's go and do the questions now. Ian, yes, you see this little area here in 2003. I also see that as a small demand zone. Demand zone here at the left, and we're on the 618%, so that's a very good reason why the euro bounced from this. I believe the euro is not complete. I think the time is very close that we can buy it. Werner, your stop loss will depend on what kind of trader you are. If you want to buy this with a very small position or lot size, this is too much to trade in the long run. This is a shorter term trade. This is only what the monthly is telling us. I will tell you how, when the market turns, where we put our stop losses. Your stop losses should also be, if you sell at least 50 pips above your high, and if you buy at least 50 pips below your low. But this is a long-term lookout that we're doing now, outlook. We're just planning a trade at this moment. We're just analyzing the market. We're going down from the monthly down to the 4 hour and 1 hour. And when we enter a trade, I will tell you guys where you put the stop. Stops should be placed where you know that the trade that you took is wrong. That's where you put your stop loss. If the market goes against you and you know that that trade is wrong, your stop loss should take you out. Alright, so in the equation on the euro, here's our analysis at the moment. Are you still with us, Mr. Slongane? You know what's going on the Elliott wave principle. Ian, do I explain it correctly? Do you guys understand? This is an advanced class. Last, please tell me if I'm going too fast. If you don't know, the YouTube videos will be on. Right, Johannes, you're also here. Thank you. Alright, so I'm working with a 5-wave extension here. That's what I'm doing. That's what I'm analyzing in the market. Let's delete this yellow part again. We know where we are. So I'm going to delete that box. Alright, Ian, Ian's got eyes glued to the screen. Well done. Alright. Okay, so I know we are still going down in this market. I suspect the euro is still a little bit in a bearish trend here. And why do I say that? It's because it didn't hit my equal legs yet, and we're still in the 5th wave extension here, and I see my RSI is down here at the bottom, which is an extreme. That shows me that this is only a 3rd wave. This is a 3rd wave. This will be my 4th wave. And what does the rule say of my 4th wave? Is that I put in my Fibonacci's. My 4th wave will 80% of the time be on my 38.2%. Alright, so now we're zooming in again. We're going down to the daily. We're on the daily chart now. So now we are happy because we are in a bearish market at the moment. There's no reason we should buy this market. Not at this moment, not what I'm personally seeing. There's other traders that is buying. I have no problem with that. Remember that our long term, are we already in the fib zone? So there's traders that's buying the euro. I have no problem with that. This is just my kind of trading, how I look at the market, and I suggest that you do the same. You go find out what you're looking for and what works for you, and just don't jump into a trade because everybody's jumping in a trade. Go to the top of our SA Trader Lounge. Go book a live class. Go and do the webinars. It's all for free, guys. And learn how to trade yourself and how to analyze the market and how your psychology works for you. Alright, so what do Kobus Kemp want to do with this market? I've got a third wave here. I know we're retracing to the fourth wave. Alright, so that I know, and I know that is on a 38.2%. And if I look at my candles here to the left, that to me is a supply zone. That opening of that candle is my supply zone. Why? Because we're in a bear market. Long black candle. We're sideways for 4. I like 3 or 2 candles more than 4. Alright, and who won? Who won the battle? The bears won. Alright, so there is a nice supply zone. All the bears took up sells there. Broke out, and we know that that's also was support. That is future resistance, and we can see that that supply zone is very close to my 38.2%. We're in a bear market, and I am looking to sell the euro around 1550, 1650. That's a 100 pip zone there that I would like to sell the euro. But remember that your stops is 1600. That's about 300 pips away. Alright, so that is not for everybody. I will for sure be looking here to sell the euro short term, not longer term, guys. I believe the euro is only going to down about 1.08, 1.09, but that's still a 500-600 pip trade that I will be looking at. There's only one more thing that I need from this market, and that is candle information. Alright, so if that is my fourth wave, I can immediately tell you that this is my A wave. That is my B wave. And we're looking now for a last and final push up for a 3-wave rally or 3-wave correction to sell the 38.2% fib. That's what I'm expecting at this moment. And there's one more thing that I can do, also put in. We know that the A leg must be the same length as my C leg, and you will see there that the 100% extension also is on the 38.2%, is on a supply zone. There is 5 reasons I will be reason with myself to sell the euro for new lows. This is a 3-wave correction, guys. Correction is in 3 waves. You can sell that market. One more thing that I want to look at here is maybe a stochastic which is overbought, and a candle formation, in other words a pin bar, and I will be selling the euro for around 400 to 500 pip limit. Any questions at this stage? Do you guys see how I work from a monthly chart? Get my understanding of the waves, get my targets, get my confluence areas where I want to analyze the market. I know we're in the final stages because the market might turn here in the demand zone. The ABC longer term is corrective, so the market is going to turn. America is in the trouble. I'm working with the 2 waves here to see that this is the map for me. Previously, the market is mapping out the legs here. I'm counting my waves. I see we're in the 5th wave extension. I know my Fibonacci rules. I know we're going down to the 1618%. There's still lots of space here. There's a lot of space here that we can go down. This is what I'm expecting on the euro. That is what my analysis at this moment. And yes, from there I suspect the euro is just going that way. Alright, is that easy? This, guys, you're getting in 1 hour's time or 1.5 hours time for free. This took me 11, 12, 15 years to learn. Many courses, many books, and I'm probably one of the few traders that I tell you I have burnt many accounts because I didn't have the help that you guys got. Back in the days when I opened my account, I opened it with $3,000. That was 13 Rand to the dollar. It's almost 40,000 Rand. And they said to me, open up a standard account. You only trade standard lots with a 15 pip stop. I took 150 pip and $150 knock every day. Alright, Bongani, you've got a question. Would it be wise to set a sell pending order as soon as the graph hits the 38.2%? Bongani, you can put a sell limit. Yes, that's nothing wrong. I don't have any problems with the sell limit. Me personally, I would like to enter the market if I have confirmation. Remember, we as traders, we don't predict the market. We trade confirmation. So this is our analysis of the market. We suggest that the market can bounce up 38.2%, but maybe it doesn't. Maybe it just goes through and we just bullish from here. That's also possible. The market can do what it does all the time. Alright, so I want some confirmation here, like a overbought stochastic and a pin bar. Then I know I can sell that market. But there's nothing wrong with sell limit orders, no. Alright, so just to recap, 618%, that's usually my wave 2. 38.2%, that is usually my wave 4. And in this market, the previous map showed me that I'm in the 5th wave extension, which is 1.618% of my 1, 2, 3, and 4 wave. And we also determined that our A equals our C comes around 38.2%. Alright, so I'm looking at this moment, I'm just looking at the euro. I have no problem, I have no intention to buy or sell at the moment. I am not in a trade. I'm just analyzing the market. There's not, for me personally, there's no trade every day. I'm not a trader that can trade every day. There's no trades every day for me because of my specific way that I trade. I like to stay in the market for as long as the market tells me I'm in it. I'm very bad. I know George is good with longer term trades. I don't have the patience. I want action. I am very bad with longer term trades. I'm doing my trades 2 to 3 days, maybe 4 days. But it's my specific analysis that allows me to do that. Alright? So I know all my rules, I know by my Fibonacci rules, I know what Elliott wave principle is telling me, the market tells me that is going to. Let's see what the market does in the coming week on the euro. I'm looking to sell, and basic principle of trading, guys, you want to sell in a bear market. We are extremely bearish on the euro. So you trade with a trend. The trend is your friend. That's the first thing I think you've learned when you start trading. The trend is your friend. There's no reason in this that the euro turned around. I still see it bearish. I would like to sell, and the eurozone also likes the weaker euro. That is quantitative easing, a little more aggressive than in America. All right, let's go to the pound. Let's start analyzing this market. Alright, so what is happening here? We're in a monthly chart. This immediately from the high here we can see there's my first and second wave. That's no can you guys see the waves with your eyes now? Did you train your eyes already? It will take you a few weeks, but then your eyes will be trained to see the cycles, to see the waves. Are you still struggling to see it, Mrs. Longwane? You're here every webinar. So I know this takes some time to learn, but did you adjust your eyes? Are your eyes adjusted now? Can you see where the first and second wave are? Can you see the cycles, the highs and the lows of the market? When your eyes are trained, if you're doing this for a few weeks, I will teach you in a few weeks to do this. Alright, yes, you can see the waves, so then I'm very glad. It is, when you know how the market reacts, you can see where the waves are. Like this instance here. That is very easy to see. That was my fifth wave up to the top there, that's 5, and from there we turn around in a bear market. Alright, so we're in a bear market now. You can get 5 waves together with 5 wave guys when the trend is reversing. Then you get a 5 after a 5. That is a sure sign that the market has turned. Alright, so I'm working with a pound here. We can see that at the third wave down here at the bottom, the third wave is the RSI. There's RSI is at the weakest, so we know that there's a market extreme. Alright, so let's analyze together. Let's analyze the market. What can we expect here? Alright, so we're working with a 5 wave run now. Let's delete that. Right. That is what happened in the past. Obviously it won't help us now, but we can see what's working from here. Alright, so we're working with a 5 wave decline. We see that this is some sort of correction. Why do I know that this is a correction wave? The market is overlapping, guys. The highs and the lows are not far from each other. We can see this is an impulse wave. This is extreme and complete impulse wave. Why? Because it's not overlapping. So that is either a 1 or a move. That can also be a wave. Alright. Let's see where we are. Alright, so the market here is extreme. Alright, the question participant 4. Sorry Kobe, but is the MACD also helping? I don't use the MACD. You can help the MACD. The MACD will show you divergence. MACD is where 2 line crosses. I don't use the MACD personally. A good way to use the MACD is together with a stochastic, where the stochastic will show you overbought and oversold signals, and the MACD will show you when the 2 lines cross that you are in a trend and you can buy or sell in the direction of the crosses. I use the RSI. The RSI shows me divergence. Divergence is where the market has a low and a lower low, and where the price action does not give me the low and the lower low. I will show you an example of that just now. I will come to the divergence, which MACD will help you. Alright, so you can use a MACD, use it together with the stochastic. Stochastic will show you overbought, oversold, and the MACD will show you divergence. Alright, so everybody still happy? And I know this is a 2 or a B wave. I know this is an impulse wave, so where is my Fibonacci's? From the top to the bottom, I want to sell in the fib zone. And guys, the market can do what the market will do whenever it wants to do what it wants. There is a specific example where the market didn't go to the fib zone. We wanted to sell, we see an impulse wave, we are looking for the market to be corrective to the 618% or the second B wave, but the market didn't go there. It just went down to maybe, I think it was the 50%. Let's go put in the 50% fib there. So our market only went to the 50%. Alright, just short of it. We did everything right. Analysis was good. Waiting for a sell. Didn't hit our entry. That's okay. We're working with what we've got. Going down to the weekly, this is the pound. Alright, so we know that the market is turned there. Alright. This is some sort of correction. That was the end of my correction on this red line here. There the market turned, so I'm working with that point now. Everything in the past won't help me. I'm working with that resistance. That is my second or B wave, and I want to know what's going on down from there, because I know from my second and B wave I will be bearish. I can count from that. There's my second or B wave. I've marked it with a resistance line. And I see my wave here. There's my RSI at the bottom, at the low here. And what does that mean? That means that is my third wave. I have no divergence. Divergence is the following: where the market makes a lower low in price, but a higher low on the RSI or the indicator. That can be a MACD or an RSI. Lower low in price, higher low on the indicator. That is divergence. Alright, so I can tell you what I see on the pound just now. Just want to put in my second wave there. Here we go. This wasn't or isn't so clear to see, guys. Let's go down to the daily. I knew this is my third wave. My RSI showed me. I knew that we are retracing to a fourth wave, which the rules tells me that it must go to the 38.2%. I saw that as my 1 and 2. And if you're looking at the daily, you can even see there's 5 waves down, which is the case between the 2 and the 3 wave. Alright? Can you guys see that? There's my first and second wave. There are 5 waves down to my third wave, and we are retracing back to the fourth wave. I'm looking to sell the pound. Long term, what is going to happen? This is almost complete. We're down to the third and fourth wave, so I'm looking for the pound to go down a little bit lower. Maybe something like this, but yes, then it will turn around and do a correction again. Alright, I'm looking for a corrective wave, and you remember that corrective wave are 3, 7 and 11 waves, and I'm working at the moment, I'm working with a 7 wave move, which I suspect on the pound at the moment. So we're doing a WXY, which also my W equals my Y leg. It's just a double zigzag, other word ABC, it's the same thing. And look at that 100% extension where my Y leg is the same length as my W leg, very close to the 38.2%. That's a nice area for me to sell. I think the market will be turning there. We're in a bearish market. We know that there's a lot of bullishness around here. Look at this example here. There's a lot of guys that bought the pound, and I totally agree with that. That's a nice 400, 500 pip trade, guys. We've been buying here. There's a lot of guys that bought the pound. I agree with that. If you're only working over this head and shoulder, can you see the head and shoulder here? Remember that the head and shoulder doesn't need to be straight. It can be skew as long as the head is the lower part as well. So that is a nice head and shoulder, and we know that the head and shoulder is a trend reversal pattern, and we buy the market there. Otherwise we can buy the market down here if we have a trend reversal candle information, but we can buy that break and see how the market from resistance turned into the support, and the guys are still riding the pound up. Totally agree with that. Me personally, I'm looking to sell that area there, 1555. That's a 38.2% my way 4, and I will be selling, and I will be looking for new lows. And why do I do that? Because I'm a shorter trend trader. I want to get out in a week's time, and the only thing that my head tells me is that you've lost too much money in the past trading against a trend. I want to trade with a trend. There's a trend from July the 14th. It's more than a year. It's all, July 14th, sorry, it's 7-8 months. Almost a year that this market is bearish. I want to sell that. And if you go down to the supply and demand levels, look at this little area here. Look at that long black candle. In decision time just before that, that shows me that the bulls and the bears had a fight there. The market was out of balance and the bears just took control of this market. And that will also be my supply zone that I'll be looking to sell the pound. Can you see how I use all my info? Every tool that I've got in the box I'm using to prepare myself for a trade, to see what the market is doing there, but I'm still not trading. I'm just anticipating a move to up there. And when that market tells me it wants to turn around with the candle information, when my indicators are overbought, I want to sell. Alright, any questions to this point? Do you see how I use all my knowledge that I want to teach to you guys, and that what GFI wants to do, to analyze the market correctly, to wait for a trade, to get a zone where you want to buy or sell, and then when the market tells you, then you jump in. The market is the leader, our traders is the followers. You go after the market. The market has no reason to go do what you trying to tell him what to do. It's just like the ocean. You must just get the waves and you get on the wave. The sea will tell you where the waves are. The market will tell you it's turning, it's getting resistance. Then you sell. Alright, going down to the yen. I did the yen last week, so I'm not going into the yen now. We've worked with a triangle here. We know that the triangle is in the fourth wave position and it's a trend continuation pattern, and I'm very happy with that. We had a bullish break here. I can see 1, 2 and 3 moves. I'm still seeing more upside in the yen, and why is that? Is that my RSI is only now an extreme. So that shows me that this is some sort of other third wave. There's a 3 wave there, and that is a 5th wave extension 3. So let's make that my 3 there. That will be my 4. And that is the 3rd of the 5th wave, which I will be labeling like this. So what do I expect in the euro yen? Just for the guys that didn't do it 2 weeks ago, I'm suggesting that the market is telling me that that is some sort of a correction move. You can work with a triangle here. Alright, which we know is happening in the 4th wave position. There you are. There's a question. The question is, what is an RSI? RSI indicator down here. It's a relative strength index, and the relative strength index show me the strength of the waves, and I want to see that which waves are the strongest, where I can see that the market will be retracing, where the market is an extreme that I want to know the market might be turning, and I will trade according to that. I will do a whole lesson, just a YouTube lesson on indicators, Sushile. I hope I pronounce your name correctly. I will do a YouTube video on all the indicators that I know. I'm not going to do it in a webinar. I will do, with George's permission, I will do a webinar or just a YouTube video on the different indicators, and then you can go look how we use our indicators to advance our trading. Remember that indicators are lagging, so we use price action, which is current price action, shows us what the market is doing, that the indicators are lagging. So we did all our technical analysis, we do first, and then we see if our indicators are lining up. Alright? Alright, so this is the Japanese yen. We can, this was the A, B, C, D. I think we're still going down here. If I do anything with the Japanese yen, I'll be looking to buy some sort of area here, as close as this support line here of the possible a triangle. We don't have to be in a triangle here. I'm just working with it at the moment. The market is not giving me any indicators that this is a triangle. You can see there's an extreme turnaround here, and I'll rather be looking to buy it down at the bottom. Anything else? Longer term, Japanese yen up. Why is that? It's because we still need a fifth wave there. With that leg, which will then complete my cycle with a 5-wave impulse. And again, let's look at the rules of the impulse, guys, to see if our Fibonacci is correct and if my label is incorrect. I told you when you've got your first and your second wave that the market will go to the 618%. It went down here to the 78.6%, so that's fine. And we also know that our wave 2 is in place, that our wave 4 should be on our 38.2%, and you came down here to the triangle on the 38.2%. So my whole analysis here is correct. If I can test this one, I've got my first and my second wave. I know that is my third wave, and it will retrace only 38.2%. And you can see how the market is bouncing off support here because of that level there. Alright, that's a hidden level, that is Fibonacci, that's a hidden support level, 38.2%. Alright, any questions? Is something that I'm analyzing the market to show you the steps that you take to get into a trade. You take a longer term, see what the market is doing, where are we in any cycle, is there support and resistance, are there any supply and demand levels, and then we decide we can trade off that. It's how we get to that certain point of decision. Any questions that you want to guys to be answered? I'm going down to the USDCAD quickly. This is an interesting one. We're going to explain, or I can work through it again, but the CAD at the moment, I know the traders are split in two, or probably split in 8 equal halves, or what the Canadian dollar will do over the next coming days or months. And I will analyze the market with you now and see if you agree, and if there's any trader that disagrees with me now or wants to bring up. Let's make this an open session, guys. This is just not me talking. I want questions. I want to see what you guys see. Remember, I see the market differently than you. I need your eyes. There's many times that I'm in a trade and one of my big friends, he's a big trader in the country, tells me, listen, did you see this and did you see that? And I didn't even recognize it. So my eyes are trained in one way. I need some other eyes and other questions to see so that we can analyze this market together. That is why as a Trader Lounge Facebook is there, so that we can see different opinions, different analysis, different charts, what the traders are doing. We're all learning every day. The day that you're going to fall in this business is the day that you tell yourself that you know everything. There's many times that you will come to me, and I get it on Facebook and inbox all the time, is what the market is doing here, what the market is doing there. And I tell them, I don't have a trade. I don't know what the market is doing. I'm going to give the market some time to show me setups, which way it wants to go. Alright, so let's look at this Canadian dollar. Immediately I can see this is a bearish market. This is an impulse. We are busy with a corrective move. Alright, so immediately I can, from the top to the bottom, I put in my Fibonacci's, and I see that the market is now on the 50%. Alright, it bounced off the 50%, it didn't take out the lows, and we are again going bullish here, and the 618 is just above that high. Okay, so that's the first thing that I want to see. And if I'm working with an impulse wave down here, what is the rules? This is probably a 1 or a A move, so but let's make it a 1. So what do I expect? I expect an ABC. Alright, so that obviously is my A wave, sorry. Can everybody still hear me? Everybody still fine? Right, Ross, here we go. Thank you very much. So I'm looking for an ABC. The market is doing an ABC. We're corrective manner here. Alright, so I'm looking for a C move. I don't know where market will turn. The market can turn there. Yes, it can. Why? Because there's some supply level there. There's a nice supply level. Look at that candle there, that spike candle. It's almost like a doji candle. Just after that, the bears took control. So that opening and closing of that is my supply level. So we see the market bounce here on the 50% is equal to my supply level. It basically it shows you that you can be already in a sell. There's some traders in a sell already from only trading supply and demand levels. Where's my following supply and demand level? I'm going to mark it here with a red line here. That to me is another supply level. Alright, so if that supply level is taken out, I will be looking to this area here. There's a nice resistance. Two resistances close to each other. There's a little bit of a supply level there, so maybe I'll be looking for that level there. But let's go further. Let's analyze the market. And I immediately do it like this, guys, is to show you that I will clear all my charts and I will start my analysis from the beginning. Maybe I see something new. I didn't prepare the chart before the time and did all the analysis. I'm analyzing the market with you so that you can see how my thinking works, how analyzing works. Alright, so let's go on. The other thing, I know the structure, I know where we might be going. This might be a sell area. It's on a fib zone. That's very nice. The RSI at the extreme. Alright, so that's kind of something I will be looking into if I go to the weekly. And if I put in what we did tonight, the Fibonacci extension, I know that my A most of the time is equal legs, A equals C. Alright, so now something is different here. Look at that 100% extension. It's basically on top of each other there, the 618%. Alright, I will move it up and down so that you can see how close those two are. Alright, there's the 100% extension. You see there's equal legs. I draw it down to my 5, to my B wave down here, and I see there the 618% is exactly on top where I see the market going A equals C. Alright, so now we'll be working with that. Going down to the weekly. Alright, so we're working upwards. We're in a bullish market. So what do I want to do in this market? Let's just zoom a little bit out. I want to show you that supply and demand level here. This is a supply level. There's just before that long black candle. Those two candles there. That shows me against this resistance. There's a lot of battle here going bulls and bears, but the bears took over and the market broke down. There's another supply and demand level. Supply level, guys, I'm going to show you. Some guys call it the Oreo cookie candle information, but it's a long black candle. You've got indecision in the middle and you just broke down again. Look how the market came down to that demand supply level there, and the market turned around in that supply level and just fell further. Alright, I introduced a new candle information to you last week. I will do it again. Okay, so let's go on. I will analyze the market. How's my thinking? I've got a low here that I'm working with. I see my RSI at extreme, and what does that tell me? That tells me 3. Because my strength is in my third wave. So immediately I know this is my first and second wave somewhere down here. I'm not going to analyze it now, but this will be usually the case here. Alright, you can see this is quite nice. C waves, remember C waves are 5 wave moves. 1, 2, 3, some sort of 5th wave extension it looks like. Alright, so there's 1, 2 and 3 and 4. Elliott wave will not break the basic rules of trading, which is past resistance here. Look at my first wave is future support. Future support. And we're working with a 5th wave extension. So I'll be looking to label it like this. Right, we're getting somewhere. So obviously we'll that by my first and second wave, and from there we're working with the extension. I just want to zoom in this last part. 2 weeks ago on Facebook, Trader Lounge, put the chart on there just after we did our first Elliott wave principle lesson, and I told you guys we are looking to sell. And why are we selling short term? From this high we know that we must retrace with an ABC or either a triangle. So let's make this A, and that is our place. That is, we were around this area here. I told you guys there's 5 waves down. You can see it here, 1, 2, 3, 4, 5 waves down. I knew that was a retracement to B, and I told you to sell in the fib zone. And look at that candle there. That pin bar was in a fib zone on your 4-hour chart. Let's delete this fib again. Don't get confused here. Let's delete that one. We're working only short term here. Going down to the 1-hour chart. Alright, so there's my first 5 wave move down. 1, there's my second wave. There's my third wave, 4th wave, and we did a 5th wave there. And I told you, sell a 3 wave pullback to the fib zone, because we're looking for C. We've put in our Fibonacci's. See it into this fib zone a little bit fast. Went through the fib zone. And that dragonfly doji or pin bar or shooting star formation there, that was your trigger to enter short. And some of the guys are still short with trade because we're going to equal legs down here. We're looking for an ABC move. Why? Because we're in our 4th wave. Alright, let's bring that in down here. I believe the Euro CAD of the dollar CAD is in the 4th wave now. We're doing an ABC, and we also know that the ABC will be equal legs, which will be down here. The guy that is short, that is our target area. And why will I be looking to buy? Because the sequence is not complete. And where will I be buying? I will be buying in at 38.2% from my 1 to 2 move. Sorry, not that one. Alright, so this is my 1, 2, 3 and 4, 5 move. Alright, so that's my 38.2%, and I will be looking behind to buy around this area. Alright, so the market is coming down. I believe we're going to this area down here, the 38.2%. That's Elliott wave, that's what's telling me. Maybe it will turn around there. I don't believe so. Look at this long candle here. There's no support down here. The only support is at this supply level. Look at this and that supply level. And where's that supply level? On my 4th wave, on the 38.2%, which is some of my Fibonacci rules, I will be sure to looking to buy the Canadian dollar around 121. Guys are still short. no problem. We also took the short last week. We took it at 2,700, it's at 2,690. So already 220 pip stops, 220 pip up. Stop should be on entry now. When we entered this trade, there was a question earlier with stops. This is one of the places where I'll be selling the market on my Fibonacci's, my fib zone, with that shooting star formation. Stop should be above the highs, 50 pips above the high, and you're riding this market down to the supply level there, which is on your 38.2%. We will be looking to buy there. Alright, any questions further? Is that quite simple? 1.18 Werner. Let's look down there. You say 1.18 on a monthly support. Alright, so let's see there. If that works for you, Werner, that is fine. I don't see anything around 1.18 at the moment. I see something here at 11975. There's some sort of supply level there, and your next supply level is down here before this long white candle, 1.630. But I don't believe the market is going that down. Why? Because the market usually doesn't go further than the 50%. Werner, but if you're confident with that, you trade the 1.18. If you want to buy there, I hope for your part that the market does go there. Fibonacci's Elliott wave and supply level down here shows me that the market will probably not go as low. And obviously the A, B, C that we are looking for equal legs, and I will be going up to 1.36. Is there any market? Can we move on, guys? Does this lesson make it easier for you to understand the principles that you put in place, the steps that you must take, step for step? How do you go through the market before you can enter a trade? And we haven't gone down to the candle information yet. That is another thing. You wait for candle information before you enter a trade. Looking at the Aussie, we're still in a bearish market. We see there that we're basically in a fib zone already from this high to that low. We passed the fib zone. Longer term traders are looking to buy the Australian dollar. And very important, all the majors are telling us the same thing, except the yen, but the yen is on its own. Alright? So a little bit upside on the dollar. Alright? A little bit upside. You can remember downside on the pound euro we saw, more upside in the yen and Canadian dollar, and we're looking for a little bit downside on the other two as well. Alright, it's because we're working with the dollar index as well. We're working with dollar pairs here. Weekly on the Aussie, I see basically a double bottom thing happening here. I'm not very interested in this market at the moment. You can trade it as a double bottom. I introduced you to the new candle information that is a supply and demand level, and here is a nice one on the Aussie dollar, and I want you to, in the following, please look at the market and see if you can get something like that. Alright? I use this a lot as supply and a demand level. I'm going to mark this with a arrow here. I want to work with this resistance, this high. This is a resistance. The market turned, and just after the turn, the market makes a long black candle, a little candle in the middle, indecision, and then again the market breaks out and make a long black candle again. That to me is a very nice supply zone. To be safe, I will put my stops above the high, not above the supply level. Guys, the market usually comes down to that level because there's a lot of buyers and sellers in that specific area, and the market will respond from it. Here in the Aussie dollar on the 4 hour as well, here at the bottom. This is what I'm looking for. This is what I'm looking at. You can either work on the high, but I like to work on the opening and closing of the candles. So that is a turn in the market. There's my support. Very important thing. 3 things might happen. 1, 2, and 3. Alright? 1, you've got a big white candle. 2, you've got a small candle in the middle. And then again 3, you've got a long bullish candle again. That is a rally, a base and a rally. You can mark that my entry at the moment on the Australian dollar is 7,700. I'm putting it just above that opening and closing price. That is a specific candle formation that you can look in the market, that you can use for supply and demand. It's a very specific one. Alright, so that area there, 7688, that's the exact price. That's why my entry on the Australian dollar at the moment is at 7,700. And why do I say that? Do I only use the demand level? No. I'm working here with a 5-wave rally, and I'm going to label it so you guys can see how I label this market. I'm looking for this market. This is the hourly chart on the Australian dollar, and why I'm looking at a buy at the moment if I'm in a strong bearish market is because on the weekly there's also another candle information here. It's called spinning tops or spinning bottoms or tweezer bottoms. Alright, there's a question from Ross. Could that be 2 demand levels, one just above the other? Usually you on the 4-hour chart, yes, remember this is a bottom or a support, Ross. This is a support where the buyers just got in and the buyers or the bulls got control of the market. Let's delete this. Alright, so we came down, we're in a bearish market. We took out the lows, and look at this level here, this little doji candle here. The bulls just came out and took this market, and they basically broke this resistance. This little small resistance here, market is still under that now, but basically challenging the resistance. Alright, so there is a lot of demand or buyers in this market around this support. Now the market came down, and where the market turned around again, also on the doji. Alright, so the market turned around at the indecision place or indecision area. The market turned around again and just bounced off. So this shows me that the market is a little bit bullish or wants to turn bullish maybe. And the first thing that I want to see, it looks like a little bit of a tweezer bottom. There's a long doji candle there. If I go to the 4-hour, there's my almost like an evening star, a morning star here. I've got a demand. I'm thinking, yeah, maybe. But the first thing that I want to see a 5-wave rally. Because a 5-wave rally in the Elliott wave market shows me that the market is turning. Alright. Now look at this 3 here. The market extreme on my RSI. So that is a 3rd wave, and that is a 3rd wave. Because the RSI shows me where the strength of the cycle is, and that is in my 3rd wave. So that is a 4. So how I'll label this market. Remember that the market usually comes down and make a 4th wave at the previous low, or the 4th in the lesser degree. And that's exactly what happened here. It found support at the previous 4, and obviously you will know that this is my 1 and 2, 1 and 2. Alright, I will label it for you so that it just gets clear to you guys. Any question while I label this quickly? Alright, so that is my labeling. There's 5 waves in 3. And I believe we're at the top here. So obviously that will be my 5th of my 3rd wave. And I will test my analysis now. I like confirmation. and that probably is my fifth wave. And if you go down to our slides that we had in the beginning, we know that the fifth wave can be truncated. In other words, it's not higher than the third wave, so that can be my count. Alright, what's the other rules? That my fourth wave is usually on the 38.2%. So let's this run. Alright, this one came down to the 50%. It was a little bit deeper because it's a truncated fifth. And that one, you see, found support on the 38.2%. So I know that that is my fourth wave as well. So what I'm looking for on the Australian dollar, if I want to buy it, this is a 5-wave rally for me. I'm looking for a A and a B and a C, and I want to buy it in the fib zone. I want to buy it down here at the 618%, and let's see where that 618% is. It's on that demand level, or very close to it. I wonder if this market will hit it. That's why I put my entry, it's a forward order, guys, on 700. You will see on that 618%, because the market is telling me a 5-wave up. It's in a demand zone there, this little candle formation here. Alright, obviously I'm working with a double bottom, so that's more reason. There's a lot of stuff here that's going on that showed me there's more than one reason to buy the Australian dollar. It will be a short-term trade. I will only looking to buy this, to go for this high. So we enter at 7,700. My stops are at 7,600. That is 20, 30, 40 pips below this low. And I'm only going for that high there, which is about 1.80. So that is a 300 pip limit, which I risk around 100 pips. Risk reward is fine. Longer term, I see tweezer bottoms. You can see a double bottom. Everything is telling me that I might be entering this trade. If I come tomorrow and I see things are not looking good, I will remove that trade. I'm looking for some candle information here to buy the Australian dollar. Any questions? Are you going agree with me? What I'm looking for on the New Zealand dollar, the same as the euro and the pound. I've got a decline here, and all I'm seeing at the moment is that past support becomes future resistance. That's all I need to see on this chart, and I know that is on the 618%. Alright, so there's my down run. I'm retracing at the moment. We're bouncing off the 50% here, and there is a nice supply level there. There's my supply level. That's a nice area on the 618%, and if I zoom out, past support will become future resistance, and this is also a corrective move. You can clearly see the corrective move. This is a 3-wave rally, guys. This is 3 waves, 1, 2, 3, and if I put my equal legs, I will tell you exactly that that will be on that level. So let's test it. Put in my Fibonacci extension, get my first leg, come down to my second leg, and look at that 100%. It's on that 618. So there's 3 reasons for me to sell. Alright, number 1, A equals B, or A equals C. Alright, that's my first thing. Number 2, that's a 618% retracement level of Fibonacci. Past support becomes future resistance. So there's 3 reasons that I will be looking to sell that level. We're in a bear market already, so that is good. And all I'm looking for now is candle information. I will be looking to sell the Australian New Zealand dollar around 7,600, 7,650. Alright. I'm putting my neck out. This is recorded. This is live in the market. In a week's time, some of these trades will be working and some of these trades will not be working. I'm the first guy that tells you that I am wrong many times, that I also have losses on my book, and you know that you got losses as well. But if I stick to my rules and I stick to the principles, then I will have more profits than losses, which is the case. I've been doing this for 12 years, so I will not be in the this business for so long if I didn't make any money. Any questions? We about to finish, guys. Is there any market that you want to come and look with me? Look at the markets you want to look at. Alright, Ian, can you overlay charts like gold and Australian dollar, oil and your CAD for comparison's sake? You can do that. So there's some of the charting packages that you can overlay charts, but I cannot do this on this MetaTrader 4. Werner, I just know that gold and Australian dollar is working together, and I know oil and Canadian dollar is working because they are exporters of oil. So you can overlay chart. There is software packages that you can overlay charts and see which one is turning. Alright, there's another market that we want to do quickly. Australian dollar, New Zealand dollar. Look at that market. Katlego. The same thing I do with all my analysis. If I clear my charting here now, it will look exactly the same. We're in a bear market here. You can clearly see the bear market, and we also see that it is not overlapping, so that we know that is an impulse. Alright, Ian, we will do this the rand just now, and I've marked it as a 1 and 2 and 3. You know exactly what we're looking for. We're looking for the low on the RSI to show us the third waves. Alright, there was a corrective channel. I actually sold it. Ruan knew that I sold the Aussie dollar, New Zealand dollar pair. And why did I sell it? Because I was the third wave. We came a corrective manner, overlapping manner. You look at this sideways movement here. That to me is corrective. We came into a supply zone there, and the market from there broke down. I think we're still in the fifth wave. You can see there again a corrective channel again, and the market just fell. So the impulse is clearly to the downside. We're in a bearish market, and we also see on this sideways corrective channel here how the corrective channel which was support broke. The market came down, went up again to that supply level and tested that as resistance, and from there market fell. And how do I label this? Quickly down to the 4 hour. If I look at my RSI is not very weak at this moment. I still see more downside. That RSI is not showing where it's turning. What I actually can see is that this might be a 5-wave decline. If you can look at this 1, 2, 3, that's a corrective channel again. So that's showing me this is my 4th wave. And I believe we're in the final 5th wave. Katlego, we basically, this market is, I believe this market is preparing to turn, but there's no trade at the moment for me here. The trade was up here when this resistance support became resistance up here. Alright, that was a trade, and the other one was what we are selling here. That we sold. So this trade is already, there's no trade here at the moment for me. We're on support. You can see this past support here. We're actually trying to break it now. So Australian, New Zealand dollar, it's the final stages, I think. Still working with impulses down. Going to the rand. I don't trade the rand, Ian, but I will look at the chart for you because the principles must stay the same. Now, one thing that we do know of South Africa before we're looking at the charts, alright? And you can do this with each and every market that you're looking for. The strikes last year with the gold, with the mines, will influence the gold price, which will influence the rand because we are exporters of gold. So the more they strike, the weaker the rand will get. That is basic homework. You don't have to think about that, you know that. Alright? So I'm looking for the rand to get weaker because the fundamentals in South Africa tells me that the rand will go back to 13, 14. Some say 15 rand at the end of the year. That's a bit wild for me. You can also see on this little spike here, I don't know why my charts did that, is that I cannot really do my analysis in the right manner if you get spikes like that. But let me just see if I can get something out of this chart. Obviously we are bullish. We are making higher highs and higher lows. Our 200-day moving average is still below us. You can see clearly that these areas here, Ian, is corrective channels. There's no impulse move on the rand at the moment. It's just a mess. It's just a up and down. That's why I'm not trading it at the moment. What I do want to show you is the following. Look at this candle formation here. Do you see this long bullish candle? There's our middle one again, and this long bullish candle again. That to me is a supply zone. And look at the market, how close the market came down to test that supply zone. Okay? Long bullish candle. Bears and bulls are fighting. Almost got hit there. Market broke out. And we are basically taking the high. So what will I be looking for in the rand? I will be looking to buy the rand. Looking to buy the rand from this lows down here. Just look at this. Okay? This to me is a 3-wave corrective move. If you're looking at Elliott wave principle. That to me is a 3-wave corrective move. So obviously we are impulsive to the upside. Working with this low at 11.25. Let's say 11.25 Ian. I will draw in my fibs. Working from that low, and I will be looking to buy the 618%, which is around 11.50. 11.50 I will be looking to buy the rand if I traded that. Because we're in a bullish market, we took out the high, we're just retracing now at the moment. Buy the fib zone in the rand. If I draw my resistance line down here, that's also a corrective channel. We're trying to break out to the upside now. So yeah, by around 11.50, but remember that your stop loss below this low. This was also past support. If you take that two highs there, resistance line over it, you can see where the market bounced from there, right over those two highs. Resistance became support, and we just bounced around. Alright, so I'm suggesting rather to buy the USD rand. Alright, so that is that, everybody. We did the confluence areas where there's one more reason to sell is the extensions and the fib zones are on top of each other. There is my Elliott wave count that is in sequence with that. We did the fourth and the third wave extensions. We looked at supply and demand zones where I'll be looking, and go look at that candle information, the one that I told you. We have the bull candle, little small candle, bull candle. You can put a forward order to buy that market. Alright, Werner, cheers. Thanks a lot for joining. Thanks everybody. As I say, every 2 weeks the webinars will be on YouTube. So the guys that the previous lessons or missed the previous lessons, it will be on YouTube. Pranal's got it tomorrow morning. Thanks everybody. Have a nice week. Let's see if the setups that we've got on the majors, we did mainly the majors. Let's see if that setups give us something. I will also do updates on the charts on the link, and go open up that FX Blue accounts. Join us in the competition. It's a lot of prizes to be won. And if you don't know anything about FX trading, go book on FX Trader Lounge for a live session. Thanks everybody. Dankie meneer. Very helpful. Alright everybody. Thanks a lot. Keep well. One more question before you go. What time can we tune in tomorrow morning? It's only on Monday nights. 7 o'clock. Only Monday night, 7 o'clock. Once a week. I will be posting my trades during the week. I will post on SA Trader Lounge. and I will show you what are we looking for, and I will show you the Elliott waves count, where we want to buy and we want to sell. Alright, that's it everybody. Have a good evening, have a good week. Bye bye.